Hi everyone, welcome back to my channel. We are talking about Chanel yet again, my third Chanel video back to back on this channel, but I want you to stick with me here because I think that you're going to find this particular video very interesting. Rather than talk about the items and rather than talk about the latest price increase, I wanted to dig into what's happening in Chanel, the business, corporate, the financials. So I have a chart here that's going to be very interesting. I'm going to dig into the numbers with you. Now, for those of you who are not aware, Chanel is privately owned, has always been privately owned, which means that they are not a public company. You cannot invest in them. You cannot buy shares or stock from the stock market. Very different from, let's say, LVMH, that owns Louis Vuitton, as well as many other luxury brands, or the Kering Group that owns Gucci and many other luxury brands. They are traded on the stock market, and so you can buy shares. I am a shareholder of LVMH. I talked about why I decided to invest in LVMH a couple years back, so I'll link that video up above if you're interested in that kind of stuff. But for today's purposes, I want to focus on what's happening behind the curtain at Chanel and maybe kind of understand what else might be driving some of these aggressive price increases? Because it's not just about inflation. It's not just about resellers and trying to pull back on the saturated market. You know, it's not about exclusivity only. It's not about just trying to be like Hermes. There are financial reasons. At the end of the day, this is a business. So financials are going to come first. So let's dig into this. This is a very interesting chart that I found on Vogue business site. And it shows you, look at this. This picture right here tells it all. So here it starts in 2016. This shows revenue and it climbs all the way through 2019. And then we all know what happened. The pandemic hit and then lots of businesses took a hit, of course, globally. And then it starts to drop. So here we are at 2020. Now, of course, we're near the end of 2021, but companies do not release their financials until well into the following year, so we don't know how they're doing this year. So we'll have to go based on just up to this data, okay? But that is a very steep decline. If you want the actual numbers, I'm going to tell you, it's really shocking. In 2020, the revenue or the sales was $10.1 billion. Sounds like a lot. It is a lot. It's a lot, but it's all relative, right? So we have to understand where were they prior to that. $10.1 billion is actually an 18% drop from the prior year, 2019. Okay, so that's this steep drop that you're seeing here, 18%. Now, let's talk about what's happening in different regions. So European revenue dropped by 36.4%, okay? America revenue, the Americas, dropped by 15%. So these are both double-digit drops in a year. And then Asia Pacific, revenues dropped by 3.1%. Now, we all know Asia is the largest market for Chanel and also just for luxury in general. So I guess it's a good thing, relatively speaking, that their drop was significantly less. It was not near double digits as the other regions, but still every region dropped. And let's look at this compared to our other luxury brands. So LVMH dropped by 16%, okay, in the same period. So 18% drop for Chanel, 16% drop for LVMH. Okay, that owns Louis Vuitton, Dior, Sephora, lots of brands. And then you've got Hermes, which is also privately owned, and they dropped a mere 6%. So 6% drop versus 18% drop for Chanel. You can see that is a huge difference in results. Now, here's the other whopping bomb I'm going to drop, okay? We look at sales, right? Sales is fine, but what we really want to look at is profit margin. That's where we can see the health of a business. So operating profit, I'm going to drop the number, declined by 41.4%. Okay, 41.4% in that year span that we're looking at. That's massive. Then we start to wonder, is it then no coincidence that this round of price increases on some of the classics were from 30 to 40% increases? Okay, there's mathematics behind this. It's not like they're pulling numbers out of their behinds. There are CFOs and all kinds of financial analysts and business people analyzing this stuff all day, every day. They couldn't care less about how pretty these bags look. They're looking at the health of the business. The CFO of Chanel was quoted to say, "It was the most challenging year even for this company." They say even for this company, probably because luxury brands notoriously can ride out these sort of ups and downs in the economy much better than the mid-tier brands. And that's just common knowledge. So I'm going to go to an article. I want to show you something here. So this is an article by Hypebeast. It was published this summer in June of 2021. By the way, if you're interested and you want to read through all these articles on your own, I'll link them down below in my description box so you can check them out. So here the title reads, Chanel's revenue returns to double-digit growth following steep pandemic decline. Okay, so you think, wow, they're doing amazing. You got to look at the full picture. And remember, they only reveal what they want to reveal. They're not bound by all of the same rules as public companies. So they might be able to paint a rosier picture than other companies, okay? Because they can choose what they want to share. But let me point to this here. Aside from the 41.4% drop in profit, here, can you see right here? This is the CFO quoted by the New York Times. Again, it was the most challenging year ever for this company. Now look what it says here. But for us, the most important thing was to defend our values and way of doing business. So as a consumer and a fan of Chanel, I would like to know, I would love for them to articulate what are their values and what's important for them in terms of the way they do business, because the consumer backlash is real and people are not happy about 3 increases in a year, poor quality, low inventory, shoddy service. Okay, so what's your way of doing business? I'd love to know. I'm not trying to be snarky, but I'd like him to finish his thought here. Okay, anyway, so it says here, so the CFO reported that the company has experienced positive growth since last fall, and cited that revenues between January and June, now this is looking back, right? Between January and June of this year, escalated by double digits in comparison to the same time frame in 2019. So that's what they're referring to when they say they're like making a comeback. They're going back to pre-pandemic numbers, okay? And they've bounced back faster than they had forecasted. Because as you can see here, they say they had forecasted it would take up to 2 years to bounce back. And it hasn't been a full 2 years. So are the price increases playing a role in this? I would think so. Again, it goes back to mathematics, right? If they are increasing their prices, even if they sell less, they could potentially expand their profit margin, right? Okay, here's another interesting article that gets into a little bit more of the nitty-gritty. I wanted to share this with you guys. This is from GCI, the Global Cosmetic Industry magazine. Okay, so here we go. I talked about the 18% decline, okay, the 41.4% drop in operating profit. Europe, Asia, Americas, I already quoted that. This is interesting. Fragrance and beauty experienced strong growth in online sales. Okay, and this could have offset some of the declines in the other categories. Skincare in particular, the Le Lift and Sublimage. And of course, they did a big push on number 5 because they hit their number 5 anniversary, the 100th year anniversary recently, right? We saw all that buzz around it. Okay, oh, I think this was one of the items. This was gifted to me by a friend, but this was one of the items that they pushed out, a glass water bottle from the number 5 celebration. Let me go back to this. Okay, so fragrance and beauty doing well. I would not have expected that. So that's great, especially with the pandemic and people staying indoors and masking up. I wouldn't think people were trying to look good and smell good, but that's great to see. Okay, I want to jump back to this article here. This is Vogue Business, right? Published again right around the same time, June of 2021. Okay. Chanel invested $1.1 billion during a pandemic. Okay, now let's unpack that. So basically this article is talking about how a lot of the luxury brands went into defense mode and Chanel went into offense mode. They spent a lot of money, over $1 billion, and that is a record level of capital expenditure. That means that is more spending than usual for even Chanel. Okay, and what they did with that was they basically renovated stores, they opened new stores, they invested in marketing. They're doing a lot. Maybe this is smart. You got to spend sometimes to grow, but maybe this is aggressive and it's not going to pan out. If there's consumer backlash over lack of quality, poor inventory, lack of customer service, high prices, then this investment, this $1.1 billion investment may not pan out, right? We'll see. Okay, look at this right here. Just to give you the full picture, Chanel says its investment, that $1.1 billion investment, is a 45% increase on 2019. They're spending more than they did before, much more, and equivalent to around 11% of sales. You're spending 11% of sales. That's a lot. That's a lot. Okay. So new client-facing tools, whatever that means, like concierge shopping services. Okay. I haven't seen that. An app linking existing clients with fashion advisors. Okay. Store upgrades, including the purchase of its new Bond Street store in London. Okay. New fashion, watches, and fine jewelry store in Beverly Hills, planned for next year. Okay. A new Paris manufacturing hub for artisans called 19M, creative collections, da, da, da. So they're doing a lot. They've been very busy. Don't you think that's affecting the prices? Don't you think that could also be driving the price increases that are affecting us as consumers? I think there's definitely a correlation. So the article goes on to say that Chanel may be opening themselves up to more digital sales. That could mean more e-commerce. Perhaps we're able to access more of their items on their website. I don't know. Are they really ready for e-commerce? We will see. Then it says here what the other article said about fragrance and beauty. Okay, they're seeing strong online sales for the fragrance and beauty categories, and they are continuing to expand physical standalone stores for fragrance and beauty. So these are going to be standalone stores that offer only items from these two categories. Okay, and then let's talk about Coco Crush, the fine jewelry collection. I have tried on a few Coco Crush style rings, and you guys know I love rings. But they looked funny on me. They didn't look great on me. The thick one looked like a loaf of bread on me, and the thin ones looked really dainty and not worth it. They weren't special for me, but I know some people love the Coco Crush. They're doing really well with Coco Crush. They saw double-digit revenue growth in this period. Now, does that mean they'll leave the prices alone because they're already reaping in the dough? Or does that mean because they know Coco Crush is so popular with consumers, they are going to jack up the prices on their fine jewelry pieces too? We shall see. Okay, so I shared a lot there. I'm going to pause. I want you to comment down below. What are your thoughts on this as you digest this information? Are you surprised by any of it? Is this changing your opinion of Chanel? Are you starting to grow concerned? Are you relieved? Just throw out your thoughts and your point of view. I think it's fascinating to get underneath the business and understand what's been happening financially and what might be driving some of their business decisions, including the price increases, including the push for exclusivity beyond the norm, including the limited inventory, their fight against big time resellers, all of this stuff. I'm like, there has got to be, monetary reasons. It can't just be like, oh, I want to be like Hermes. Oh, I just want to be very exclusive because we're Chanel. There's got to be money behind it. So I do think that they have been struggling. I do think that they have made a huge bet by investing $1.1 billion more than ever before, it sounds like, to really ramp up on marketing, stores, fragrance and beauty category. Maybe they'll amp up more on the fine jewelry side. But I thought this would be very interesting to put out there, and I would love your thoughts. If you enjoyed this video, please give it a thumbs up. If you enjoy these types of videos where I get into the financials, then let me know so that I am aware. In the future, I will keep making these kinds of videos. If you are new to my channel and you enjoy this type of content, I would love for you to subscribe and join our community. Okay, until next time. Bye-bye.